What is up, everyone? Welcome to another live stream. So it's been literally 2 weeks since I've streamed, and the last time I went live with you guys was when we had the breakout signal. Let me just see where this was. Screw the adverts. Yeah, that was pretty much when we broke the 3.3 cents on. Yeah, literally this candle down here 2 weeks ago. So you're up more than 100% since my breakout videos. Now no one's gonna go crazy about that, but remember I streamed with you guys through all of this. I'm a little bit more silent now that we've taken off. If you guys know, my vibe is I wait for markets to come to me. That meaning I wait for accumulation or to buy or to dollar cost average when prices are down. This is an amazing move. It's been very euphoric. But there are a few things that concern me. Now, remember how bullish I was, so don't get salty with me. We were incredibly bullish when we broke out of these areas. But yeah, we're going to look at the whole market, sit back and relax. We will eventually get to what I think about Hex over here. Nothing too crazy. So yeah, let's jump right into it. Not much. We've been looking at the interest rates. Now this is the interest rate hike for March 22nd, so in 22 days time. The market was expecting a 25 basis point rate hike. It was almost at 100%. As the Fed was starting to say that we are in a disinflationary environment, but since then, two inflation reports have come out, both of them showing that inflation has in fact resurged and is going higher. And again, now only small amounts, but it did seem to be a little bit sticky. Now, with speeches being more hawkish, we now see that a 50% basis point is, and this has been climbing daily since the last week. We're sitting at almost a 3% chance that they might be doing a 50% rate hike. And we can see with the months in the future that they're not slowing down, right? If we don't get a 50 basis point, they want another one in May, another 25 in May, another one in June. So it doesn't really look like we will be getting a pivot this year with rates staying high. And so it's a little bit concerning, and we can see how all of the market has reacted. We'll start on the dollar index. Now, we've been looking at this downtrend. Maybe I should just clean up everything. Remember when the dollar was going up like this, obviously we had our bear market in crypto, the risk assets, your S&P, everything went down, right? But we now have this a bounce over here, right? Where did we bounce off? We literally bounced off the 50%. And what is concerning here is that with the dollar going up, your risk assets do poorly, right? But we've been talking about the 2-year yield. This is how much the US government pays you if you buy bonds with them. This is the 2-year specifically. And we've seen that the interest rates don't go higher than these levels. And I said on Axis's show and previously on previous live streams that according to this chart, they cannot hike interest rates anymore. And I was literally at the bottom of the swing, and they've just reversed this market. And remember, when this goes up, your dollar goes up and your risk assets see a bit of reduction. or a downtrend. Now we're almost breaking out of these all-time highs again, which means if we get to 5%, we're at 4.853% now. If we get to 5%, that gives them room for another 25% basis point. So I'm pretty sure this is going to break the 2-year bond and go all the way to 5%. Now, if this goes all the way to 5.25% over here before the rate hike in 22 days, they have a 50% basis point rate hike in the cards. So I see this and the dollar going up to at least 5.25%. And now this is quite a crazy going out here on a limb and making some crazy predictions, but it seems like this is what is about to happen. The dollar lagging behind this move, which means that, I mean, the dollar can, for this still to play out, we can come all the way up to the 109 area. This would put the risk assets under a lot of pressure. And the bears are kind of getting onto the upper foot now, getting more ammunition, as everybody, the bulls were expecting a soft landing. Now the narrative is no landing, which they're pretty much hoping for. But remember, those bears can still have the narrative of that hard landing. And what I think might happen if the market is still bearish, and let's just look at the RSI and see how much the dollar still has in its tank, because I've got a lot of indicators up here now. Let me remove the OBV just so we can see if there are any divergences on the daily. Okay, so lots of room to go to the upside on the weekly. Let's see what the daily is doing. So we're not really oversold yet. We haven't really made bearish divergences as we had back here. So a little bit more room to go at least. So we had this nice pullback today, so this is why we see a rally across the board. Okay, so if you don't get what I'm saying, I'm starting to turn a little bit bearish here. So Bitcoin, we've been bumping our head above on these areas, literally the top, and we've actually got a higher high here. So just technically speaking, that is bullish, but we've been rejected here. This weekly has rejected up there. Let's see on the monthly. This is also another rejection candle at that monthly mark. So for this to be bullish, you need to close a monthly candle or a weekly above 2,520. Okay, stuck in this range, but pretty much I can't be interested up here. I need to wait for this area down here. That's just how my plan works. This is the golden zone. This is where I'm interested in all assets, right? Let's see what you guys are saying. Crispy Bacon Hex is on the move. Yeah, it's been an incredible run, right? Jaggy, what's up? Good day, Hans. Adramodus, what's up, dude? Fox Mulder. Mr. Crypto says good morning. Vikings away. Oh, just in time, it seems. Was hoping to see a video yesterday. Any chance for an alt season? Yeah, we should look at the Bitcoin dominance as well. Let me pull up the Bitcoin dominance for you. So we'll have to take a look at the Bitcoin dominance as well. So this has technically been being a little alt season, right? Remember that I always say when I get asked is when alt season happens is when Bitcoin is above its 200-day moving average and moving sideways, and that has been in effect, right? Let's go down to the daily. So it's been a odd season, definitely. We've just seen so the yellow line, right? Above the 200 moving average and moving sideways. And we had the AI narrative pop off. I mean, the smaller alt coins like, yeah, let's not mention names because many of them are. So yeah, so until we lose the 200 day and we get quick moves to both sides, unless we fall below 2,170, I believe it's still an odd season. But I really do want the market to come back and retest the breakout level of this W here. I'm going to try and keep the charts as simple as possible. So this is the alt season above the 200 day and moving sideways. Bitcoin dominance, this needs to have a massive leg up for us to signal that the bottom is in. This is the weekly chart. We do have a weekly W. Yeah, this tends to be quite boring, but you need to have the Bitcoin dominance flush out. It always does this. It destroys the altcoins before continuing the season. Let's add the Bitcoin dominance, the Bitcoin chart up here. Bitcoin dominance rises, your bottom gets in, and then it rises again massively, just wrecking the altcoins. People start allocating to the altcoins. Last flush out with this massive uptrend, even made new highs on the dominance. And then at this point, after Bitcoin has performed incredibly well, you slowly start seeing the altcoins gain a massive, massive market dominance and just to do their insane gains. So literally at this point, so I mean, we have a very long trend sideways trending market ahead of us. This is the accumulation phase for the altcoins. And I know everybody wants it to go to the moon right now, but let's just be reasonable. Altcoins have a long sideways accumulation phase, especially after a massive downwards trend. Now, Pulse Chain is throwing a little bit of a brick in the road here, but we can expect, obviously, this massive expansion wave now. But what happens when those people that are now, these are the savvy investors getting in now, that aren't fully allocated to Hex or aren't Hex OGs, because they're getting their Hex positions to sell into the Pulse Chain ecosystem to get their Pulse, their PLSX, and they're going to bring this market back down. And I know it's not a favorite thing to be talking about bearish things when the market is up like this, but just remember to keep that in mind, right? So I want to make sure we cover everything. But the dollar index is bullish. So the risk assets are supposed to suffer a little bit. Let's look on the daily. Yeah, we're not really oversold. We're having a nice pullback. So this definitely has more room to go to the upside. So just be cognizant of that the risk assets are going to be under pressure if this continues to the upside. And the inflation is sticky and all those things. So yeah, at the worst that could happen, I expect, I shouldn't make bold predictions like that because Binance can collapse or Black Swan or whatever, but at least retest these breakout levels. Not only that, there is a CME gap on Bitcoin. So this is Bitcoin on the futures, so trading on the stock exchange, BTC CME futures. So when the stocks don't trade on the weekends, right? So on Friday, the 13th of January, the market closed, right? And then obviously Bitcoin went up over the weekend, and on Monday it closed, it opened up higher. So the price jumps like this. This is called a price gap, right? Now these have shit. Now I have to go get my car. I'm gonna have to try and finish this within 10 minutes. So yeah, let's go quickly. So there's a CME gap on Bitcoin. These get filled 96% of the time. So another bearish thing there. Total dominance. This is Bitcoin. Sorry, guys. Oh my gosh. No, actually, I have to go get my car. Uh, that's very funny. Uh, yeah, so I'll go live later today. There's lots going on in the market. So are we saving at the all-time high, or are we going to rock the desert island look through the entire market? uh, what's up from New Zealand? Thoughts about X slowly decoupling from BTC. A couple days ago, we were at 13 or so, and we keep getting negative. I mean, that's what you're going to need that for the Hex bullish case going forward. If V3 testnet is not a buy the rumor, sell the news event. Yeah, I mean, I want the version 3 to be well tested, so we don't have to beta test it, right? So that's where I'm coming from. Buy the rumor, sell the news event, because I think there is still a little bit more time to go for the testing phase. Do you think the bear market might be coming to an end? I heard the 9th monthly candle does the stick. We just had a doji. What should I help? I heard that 3 green monthly candles does the trick. So for a bear market to come to an end, you need your capitulation. You then need a 70 to 90% rally to the upside. And then that retracement from that rally should not exceed your low below here. So this wasn't a 70% rally up here. Market cap is probably not the right one. We should probably look at Bitcoin for this. So you get your capitulation, you then get a rally, a 70% rally. We actually did get this, did we? 69%. Damn, that's tough, eh? But then you should get a retracement that doesn't break these lows. Some people say that it should stick to 50%, but I like buying at the 61.8. Let's just measure this out. Yeah, so if you get to the 61.8, it's still 25. So it shouldn't exceed a 50% retracement from there. I don't really look at candlesticks to call bottoms. But either way, you can't call bottoms. All you can look for is you can look for market structure. You can look for these large W's on the chart. Like you can see this W down here. Let me just remove everything. You can see this W, the breakout. The more you have of this, the better. So what I'm talking about is something like this, right? Just higher lows at the bottoms here. I'm still scared of that Richard Hard 11K and pray. Okay, let's quickly go through this. We've looked at the dollar index, stablecoin dominance. This is Tether, the amount of people holding Tether. When this rises, more people are selling altcoins to hold Tether. And when this goes down, more people are adding to their Bitcoin positions, so price goes up. This is a bearish cross on the 13 on the weekly. So And this is good for Bitcoin. When this goes down, Bitcoin goes up, and all the other altcoins as well. We've looked at the stock market, not really. We've come down on the log scale. We've been talking about this downtrend. We've broken out. This is technically positive as you've retested these highs, but you don't want this to break down again down here. Otherwise, we're going to come back to retest these lows. And we've seen that this leads Bitcoin, and Bitcoin then leads everything else. I don't think HEX has decoupled from Bitcoin. We're still very much in correlated to the rest of the market. Because Bitcoin had the move and then HEX had the move afterwards. And we've seen the sell-offs go over to HEX's price chart as well. 11 Crane Prey is Richard Hart's bottom estimation, and I don't try and call tops and bottoms anymore. I'm just reading the chart as I see it, right? Dominance we've done. Oh goodness. So just quickly on HEX, as there's probably not a lot of time left. Just a lot of bearish divergences at the top as you're making higher prices. I mean, from all the way back here, you've been making higher prices yet, but the indicators are going lower. On the daily, on the Ichimoku, it's incredibly bullish. There's nothing bearish on this chart at all. Just looking at the Ichimoku cloud. On the 12 hourly, we have these bearish divergences. I mean, but we've been talking about the bullish divergence on the weekly for HEX for a very, very long time, right? And it took a long time to play out. And when it finally broke out, let me just show you the weekly bullish divergences. We can see that the indicators were going higher down here, yet the price was going lower, right? This has now broken out and played out. But it took a long time, literally took months to play out. So bullish divergences at the top can take a long time for all of these things to catch up. 12 hourly, still bullish on the Ichimoku. Maybe the 4 hour, can we do the 8 hour? We can do the 8 hour, excuse me about that. Still bullish, no crosses. The lagging span hasn't caught up with the price. TW is asking when correction. I don't know when this run is going to be over. All I can do is I can pull up my Fibonacci tool and let's just remove some of these indicators. This is the area where I start getting interested at 39, and this can obviously keep on going. The higher this goes, you can see the higher the reload zone moves with it, right? So if it goes higher wherever it goes, just simply this is my plan. This has always worked for me as a granny investor, someone who's patient. I need to wait for this, and I need to go now, guys. I'm so sorry. Let me just see. Yeah, I need to go. Sorry about that, guys.